Hello everybody. In this video I will show you how to trade the Donchian Channels. I've published my script on TradingView. So in the indicators, if you search for Donchian Channel strategy with backtest, so published by Greg_007, that's me. You add it to your chart. And then you will see by default the length would be 20. And then in properties, you will see that the order size is 10. Normally I do my backtesting always with 100% of equity. But unfortunately TradingView would ban your script if you put that as a default value, because they say it doesn't meet a real life situation. I find it a bit stupid because their backtesting strategy always goes from the first day that a stock or whatever got onto the stock market. So it's also not reality that you would buy on the very first day. Besides, they compare also to the buy and hold strategy. So if you have $1,000 and you buy a share of company X and you use up your $100, then you're also trading with 100% of equity and you keep it for several years. So why not do the same with indicators? You start with 1,000, you have $500 gains, and then you reinvest 1,500. Of course, this is under the condition that you never take profit, which is also something which never happens. So, but anyway, I use 100% of equity. I find it better to compare to the buy and hold. So let's see. We have by default it will wait for a double confirmation. I will explain in a bit what that means, and it includes short positions as well. So buy and hold, the double breakout of the double confirmation is here. You can see on the Bitcoin chart, for example, the Donchian channel is flat. We break it. And usually, especially in the crypto market, we push higher above the last high just to grab the liquidity. So some stop loss hunt might occur over there. So that's why I prefer to wait for a second consecutive breakout that would show strength. And that's where on the start of the third day we enter and we go into a long position. So here the short, Donchian channel flat, we break it on this big red candle for the first time. The second day we break it again. Third day we enter, and unfortunately price goes against us, and this would have been a loss. Now what I like about this one is that you have already a view where you possibly might get stopped out, because you enter a short over here and you can see that if we close 2 times above this Donchian upper channel, so in this case you can position size yourself. So if we go for a short position, so we enter here, the green, we don't know how much the profit will be, but at least you can manage your loss. So assume that on the next day we really pump hard and then we close out 2 times above the channel. Then you can say, okay, look, the Donchian channel is around, let's say, 20%, and then you take a margin for the 2 breakouts. Let's take 25%, for example. So you say, okay, I enter here and I put my stop loss at 25% higher. So knowing this, you can already position size yourself so that you would only lose this amount of money compared to the calculation you made. Now the advantage is, have a look. So price goes against you the whole time, but the longer this takes, the more your Donchian channel is coming down. So that means your original 25% of possible loss is now getting less. And as you can see, here we have the Donchian channel flatlining here, and this one got broken twice. So at the end, instead of 25, now the loss would be almost 14.5. You see, now it lines up with the buy signal we have over here. So then the same for the opposite side. We get a buy signal. We go into a long over here. Upside, we don't know how much that will be. But risk management is all about limiting your losses. So also in this case, you can say, okay, here we have those lows, which is around $9,800. And we can say, okay, we put our stop loss below those lows. And let's see, for an ease of calculation, we can say, okay, we go for 20%. So this, you can put your hard stop loss over here. We enter the buy and we go. So and then when price is coming up, then you can slowly start moving up your stop loss as well, according to what suits you. So for this one, this is a very nice bump, which would have gotten you in from around 12K to 51K. So here again, Donchian channel flat for a little while. We break it once, we break it twice, pump up, but it's too late. We got two consecutive ones, so we go into a short. Also here, price is going against us. But this is in a very volatile period, so let's have a look. We enter a short position on the open of the candle. And then the Donchian channel is 26.6% away from us. So if we want to take a margin, then we can say, okay, we go for 30%. Hard stop loss, 30%. Take your position size accordingly. And down we go. So over here, pump up. New high. We did break the Donchian channel. Unfortunately, the next day, it's a no-go. We didn't get a new high. So maybe today we get again a new high. And if tomorrow we get another high, then this would be a go for a long. So let's have a look at the strategy testing. So 24, the value of 24 is what I did find to be the best for Bitcoin. Let's have a look. We would have 1.3 million % of profit, of course, all in theory. And then let's see, at the buy and hold, we would have 1.03 million. So we're doing better with the Donchian channel strategy. From the beginning of the existence of Bitcoin, we would have 44 trades. We have a very nice 66% profitable factor. Then the consecutive losses we would have would result in a minus 65.27% loss. On average, we would have almost 30,000% of profit, and we are in around 80 days in a long or in a short position. So let's see how the other options are affecting our trading. If we don't wait for the double confirmation, then we end up with, and now the system is slow. And is this one doing something? Nope. Okay, so this one is not helpful for the moment. Can I get the SPY? That's weird. It wants to load, but it doesn't want to backtest. There we go. All right, let's go back into Bitcoin. So 24. If we don't wait for the double confirmation, then we're at, instead of 1.3 million, we're at 820. And then you have people who are saying, no, never short Bitcoin. It's a bad thing to do. It's unethical. Well, then don't short, and you would end up with 408,000% of profit, which would be much less compared to the buy and hold strategy. So that's it, an example for Bitcoin. And then the SPY, the reason why I want to go there is to show that I believe it was 13, the best option. Yeah. So here we have 833% profitable compared to buy and hold 876. So we're doing less good, but if we take away the double confirmation, and now it's lagging again. Okay, so the double confirmation here, if we take that away, then we would get a higher, there we go, 910%. So this one is doing better. So it all depends on, yeah, on the stock or on the which crypto coin you're trading. As I said, in the crypto market, it's quite often that you have those fake outs to the upside or to the downside, and then price continues in the other direction. So it seems here for the SPY, it's not the case. But on the other hand, look as well, if we don't wait for the double confirmation, we have a 60.83% of being on the right side. But if we wait, then it jumps to 61.71. And if we wait for the double confirmation, then look what happens here in this uptrend since October last year. So we get the buy signal over here, and it keeps you in the trend until here. You would have been stopped out here. Then we get a buy signal over here. So this is one with a loss. But if we don't wait for the double confirmation, then you would see that, so here we have short signal, short signal, short, 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 which are all incorrect. So yeah, in this case, I think I would not go for those few extra percentages, so which is what, 80% more. So here we have 80% less, but at least we have a higher percentage of profitability. So it keeps you longer in the trend up here. So this, it looks better. And also from a psychological point of view, if you have to swallow all those losses you have on the way up, you know, you have to, every few days, you have to change your position from long to short. So yeah, it's a bit choppy this way. So we keep the double confirmation in this case. So yeah. Also here, stop loss management. As you can see, we get a short signal over here and it goes against us. yeah, this is a good example where you can see that the Donchian channel is actually coming up against you. So short position, we go short here, and your Donchian channel is over here, 7%. So let's say the last high is over here, and you would go for something like this, 8%, 8.6%. So here you would have already been stopped out, and look, the Donchian channel goes further up. So if you would not have put a hard stop loss, then you would have at the end 12.31% of drawback. So it's always good to put a hard stop loss if you really care about your money management. If you say, okay, I'm trading with money that I can lose, I'm not going to lose sleep over it, and I will just let the strategy do its job. Well, then as you can see from the backtesting, you have to make sure that you won't leave your sleep for a 50% loss. So that's all I can say if you don't feel like trading with hard stop losses. All right, okay, that's it for me. If you have liked this video, please like and subscribe. As you know, it always helps with YouTube algo. So that's it for me. Enjoy the rest of your day. Bye-bye.